could spike much higher than most people expect, and the biggest opportunity might not be oil itself, but the companies behind it. Right now, something big is happening in the global oil market, and if you understand it early, you could position yourself to profit. What's going on with oil? Let's break it down simply. Oil prices are being pushed by three main forces. First, supply constraints. Major producers have been limiting output. That keeps supply tight. Second, geopolitical tensions. Conflicts and instability in key oil-producing regions can disrupt supply overnight. Third, demand staying strong. Despite fears of recession, global demand, especially from different countries, remains solid.
Welcome to MSignal Pro, your essential tool for real-time market insights. Monitor your watch list, get active signals, and set up alerts. The link is in the description. Sign up today.
Put all that together, and you get a market where supply is tight and demand isn't dropping enough. That's the perfect recipe for higher prices. So how high can oil actually go? There are a few scenarios. Base case: oil stays in the $80 to $100 range. Bull case: oil breaks above $110 to $130. Extreme case: a major supply shock could push it toward $150 plus. Now, historically, spikes like this don't happen gradually, they happen fast. Think about 2008, or even 2022. Oil markets tend to move in sudden bursts when supply gets tight. Why this matters for investors? Here's where it gets interesting. When oil prices rise, oil companies make more profit per barrel, cash flow explodes, dividends increase, stock buybacks increase. So instead of trading oil directly, which is risky, many investors focus on oil stocks. Now here, stocks to watch. Let's talk about some key players. First up, ExxonMobil. This is one of the largest oil companies in the world. It's profitable, stable, and benefits directly from higher oil prices. I will display the chart and you will see that it's already been on a strong upward trend. Then there's Chevron, another major player with strong dividends and global operations. If you want something a bit more aggressive, look at Occidental Petroleum. This company is more sensitive to oil prices, meaning it can move faster when oil rises. And for diversification, there are ETFs like XLE, which track the entire energy sector. Each of these gives you exposure to rising oil, but with different levels of risk. Risks you need to know, but let's keep it real. There are risks. If a global recession hits, demand could drop. Governments could release reserves, or producers could suddenly increase supply. Oil is one of the most volatile markets out there. So timing matters. Here's the bottom line. Oil prices are in a tight, high-pressure setup, and if something breaks, prices could move fast. The question is, will you be positioned before it happens? If you found this helpful, hit like, subscribe, and I'll keep breaking down opportunities like this.
This content is for educational and informational purposes only. You should conduct your own research or consult with a certified professional before making any investment decisions. Past performance is not indicative of future results. Some AI tools have been used to create, edit, or generate content. If you found this helpful, hit the like button and subscribe, and check out the link in the description.